But we can definitely get started. So because we have a small group, please don't hesitate to jump in, ask any questions, unmute yourself, write in the chat, whatever you guys want to do. This is meant to be interactive. I really want you guys to understand what I do and how it benefits not only you as a real estate agent, but your clients, because that's who we're both servicing here. Our common goal is to get our buyers to the closing table as quickly and as smoothly as possible. So we're going to learn a lot today, a lot of good content here, but please don't hesitate to stop me at any point. So we are RCG Mortgage. We're a broker. We're not a banker. And these are some of the items we're going to go over today. A quick market update. What is a broker exactly compared to a banker? The cost savings that the broker model provides, and then the advantages for both buyers and real estate agents. Okay, so the first part is a quick market update. For those of you that don't already know, rates were raised. The Fed had in their last meeting announced that they were going to do a 75 bip increase. What does that mean? It means that they increased the rate to borrow money. So that directly impacted the housing market in the sense that rates did go up. We were at like about, low 6%, high 5%. Now we're in like the mid 6% to high 6% range. So they did increase a little bit. So that obviously will impact our buyers' purchase power. But the good news is at RCG, we are a broker, and I'm going to show you guys that although the market is really volatile right now and changing, we have a lot of good products and advantages that is going to benefit anyone in a changing market. So for those of you that are on, just quickly shout out to me what your perception of a broker is.
A broker as in like in your case a mortgage broker?
Yeah, just in general. It can be mortgage or just what is a broker in general?
From my understanding, it's more like I would say in the briefest term, like a middleman, getting a client, in this case if it's a banker, just connecting to them, helping them attain a mortgage, help them with products, help them with counseling, something like that.
Correct. Yeah. So we're a broker, we're not a banker. So what does that mean? It means exactly that. We're the middleman. So we are, I like to say, your client's personal shopper. So when you bring a client to us, this screen here, I love showing because this is exactly what it looks like when I'm shopping for your clients. I go onto this product called Loan Sifter, and we can see all of the lenders, all of my investors that we work with, and we can see who's providing the best products, who's providing the best interest rates, and we look at everything. So if lender A doesn't have something, I can always go to the lender B and see if they have something for our client. So the broker model, just if you take anything away from this, it's extreme flexibility. We're your personal shopper for your clients, and we have a wide variety of products. So we have something for everyone: conventional, FHA, your self-employed individuals, your investors. We have a wide variety. And this, image here depicts all of the things that we get to look at when we're shopping for your buyers. So what happens when the market changes? This is the biggest benefit that I want you guys to be able to communicate to your clients. When you go into a loan in this type of market, it can change. So as a broker, I will place their loan with one of my lenders. Say we're in process of the loan and the market shifts. Instead of being stuck with lender A, I can pivot this individual, if we need to, into lender B. So when would we do this? We would do this if the market changes for the better, meaning if the interest rates improved, which happened in August. And this slide right here is based off of a client that I actually had. She was with lender A. The rates dropped a little bit. Instead of making her stay at that lender, when the market conditions improved, I moved her loan at no cost to her to a different lender, call it lender B. And I saved her $300 a month. And up front, that doesn't sound like a lot, but if you look at it over 30 years, that's $108,000 in cost savings. If you take it one step further, if she invested that $300 every single month for the total life of her loan, which is 360 months, say she had a very conservative annual return of 6%, that's $295,000 at the end of 30 years that she would not have had if we didn't move her loan over. So this is a huge benefit. I see a hand raise. Go ahead and unmute.
Okay. Question is, you said you could change. So when you change, is this consider any time? Like, once you sign the mortgage, you're not locked in? You could still change, or this
So
is
you
before
can lock your rate. So we place the loan with the lender, we get all their documents over to that lender, and we lock their interest rate. When does it make sense? We only move their loan if it's going to save them money. We're not just going to move someone's loan for the sake of it. In this case, it made a lot of sense because we saw a market change. But what happens is we move all the documents over. The appraisal gets moved over at no cost, and there's no additional cost to the buyer to restart with a new lender, and there's no delay in time. This client, she still closed on time on her exact closing date that she needs to close on. And again, there was no additional cost for us to move everything over. And to answer your question, when does this happen? It's when the loan is in the processing phase, meaning all of the disclosures are signed. We have the fully executed contract from the buyer and the seller. And we're at a point where we're seeing the market improve. This is when we would move it over into a different lender.
Okay, so it's in the process of while you're trying to get the loan to buy the property, not after you get the loan and buy it. You can't change it after that.
You're saying after you close on the loan?
Yeah, let's just say a year from now it went down to 4%. I can't change it now because I'm already locked in with.
Right. Well, once you close on your loan, that's your mortgage and that's it. The only time that you would change your loan after you close is when you go to refinance. That's when you could change your rate.
Okay. All right. I got you. Thank you.
But this is more so, this is an advantage of someone that's in the process of getting their mortgage. Yeah. Yep.
Got it. All right.
This is just one example, but it's good to know because a lot of people don't understand this concept. Because if you go to a Chase Bank, for example, you go to Wells Fargo, as a banker, which is what they are, these big box banks, once you're locked into your product, that's it. So we have a lot of flexibility as a broker. Some other things to note that I like to share is partnering with us. These are just some high level items, but I think they're important. We're able to get to the closing table sooner. Why is that? We partner with wholesale lenders. So we work with over 20 different wholesale lenders. They are incentivized to move just as quickly as we are because we are only paid when the loan closes, and our wholesale lenders, which is where we're placing the loan, they are only paid when the loan closes. So everyone is incentivized in this case to move quickly. So you never will see any significant delays. You're not just going to be a number placed at the back of the line. It's always a priority for us to move your clients to close as quickly as possible.
I have a quick question.
Sure.
Yeah, so my question is I'm not sure if it's gonna make sense, but I'm just gonna try to say. So once you get the loan, right? So the loan, do you guys put it in your own portfolio or you just securitize the loan?
That's a really good question. So we're not the ones actually giving the money. So if you look at this screen, so if you see all the investors on the left-hand side, we place the loan with one of these investors. And they are the ones, United Wholesale Mortgage, for example, is one of our top investors that we work with. They're the ones that are actually providing the funding. We're not doing the actual lending of the money. The wholesale lender is. And then Fannie Mae and Freddie Mac from there purchase those loans from these wholesale lenders, and they're the ones issuing the mortgage-backed securities.
Okay, got it. And then how you guys get paid? Is it the same thing as commission based? Let's say you connect, let's say the United Wholesale Mortgage, you connect with a potential buyer. So how you guys gonna get paid as an intermediary?
So So United Wholesale, they cover our cost. The buyer's not paying for us to get paid. And the reason for that is these companies, their model is based off of working with mortgage brokers such as myself. So they get the way that they get customers is we're bringing the clients to them. Whereas your Chase, your Wells Fargo, your Citibank, they're spending thousands and thousands of dollars on advertising. These companies are not, they don't have retail storefronts where you can walk in and sit down with a banker and purchase a loan. We are out there in the field bringing the clients to them, so they cover our cost, and that's how we get paid.
Okay, got it. Thank you.
Of course, good questions. Part 2 of advantages. The turn times are quicker again because of the incentive that these wholesale accounts and ourselves, the quicker they turn the loans around and close, the faster that they the money gets funded. So that's another reason why they move very quickly. The second part is because we have access, we're able to view some of the lowest, if not the lowest rates in the industry. Again, as you saw on that screen, we are essentially your client's personal shopper. So if the rates change every day. Just if we see someone that's pricing well on Monday, that doesn't mean they're going to be the best at pricing on Wednesday. So that's something to note, that we always have access to see who's pricing and what rates are being offered, because they do change day to day. And then this is just a good example. If you compare the retail loan officer to the broker loan officer, they're just a little bit different. So retail loan officers, they depend on a small group of products where we have the variety. Our costs are very minimal compared to the retail banking. It's completely different in the sense that the cost that they can provide and charge to clients is different. We are more on the broker side, we're a little bit more regulated. So on the retail side, they can charge additional points to make more money on loans, whereas us as a broker, we are capped. We have caps on the amount of commission and the amount of points that we can charge our clients. So we're a bit more regulated, to sum it up. And this is just a contrast between the two. And if you see that there's a lower cost versus a higher cost, I'm skipping ahead a little bit, but this is to show you, this is based on data reported from 2021. On average, by using a mortgage broker, you can see that the cost savings was an average of $9,000. And the bulk of that, if you look at the lighter green color, that's coming from interest rate savings because we have the ability to shop. And then that darker green color on the bottom, the upfront cost savings, that's going to be your origination fees, any underwriting fees. So there's a savings of around $9,000 per individual when you're working with a mortgage broker. And this is again based on data from 2021. But it's really significant to see, and it's amazing because that's a big savings for any client when they're going to purchase their house. And then this is just a summary. I know I jumped ahead, but this is just a summary of the 4 main things, just to summarize the whole broker advantage. Part 1 is the multiple lenders, which we went over, the $9,000 average cost savings, making it more affordable to get into a house by using a mortgage broker. Community-based brokers result in serving more minority borrowers. The reason for this is, and we're going to go to this slide, which depicts that. So 30% of wholesale loans served minorities, where only 18% of retail loans served minority households. The reason for this is, and I'm going to give a quick example. I had a family that came here from India in 2019. When you first come to this country, for the most part, you don't have credit. You don't get to the United States and you're not handed an Amex card or a Visa card and you're building credit. So sometimes when you first get here, it takes a while for you to have credit. And in those cases, you may not have a credit history and therefore you wouldn't have a credit score. With working with wholesale lenders, we have what's called overlays and loan exceptions. So we work with lenders that will lend on unique scenarios. So the family that I worked with, one of the buyers didn't have a credit score because they were fairly new to this country, because they had strong income, because they had other individuals on the loan that did have a credit score, and they were able to show that they paid rent for a stable time period. We were still able to get them approved for a loan, even though they didn't have a credit score. They literally did not have anything reporting from any of the 3 credit bureaus, and we were still able to service this family. So just a small example, but I think it does go a long way and it's able to show you how flexible our lenders can be and who we're servicing, because everyone has such unique scenarios. So that's number 3. And then 4 is loan quality is consistent or better than retail. All that's stating is that the quality of the service that we're providing to get your clients to close is just, we're 24/7 meeting. Saturday mornings if they have questions, Sundays if they have questions, we're there for them every step of the way. And the quality of the service and the underwriting speeds are some of the fastest in the industry with the investors that we have partnered with. And then this chart, I can send this out after. This again is showing the cost savings from using the broker compared to retail banking. And then if you look at it at an even, so that's like a macro view. If you look at it from more of a micro view and you separate it from all races to minorities, the cost savings is even more. So again, this is just really driving the point home that we have the ability to shop. We have the ability to be flexible because we work with so many different lenders, that we have different loan programs that other retail banks may not be able to offer. And then this is just a summary of all the products that we currently offer. So the left side is going to be more of your conventional products, your FHA, your jumbo loans. These are more of your vanilla products that are pretty standard to the industry. The right side, which is a little more spicier, these are going to be your investor, your self-employed loans. These products are super unique. We can go into a whole other class just on investor and self-employed loans. So if you are interested, please feel free to contact me on the side through either email or text, and I'm more than happy to set up a separate phone call and go over them. But just a high-level summary. These are programs tailored to individuals that have cash businesses. They've been self-employed. Maybe they own a restaurant or their own accounting firm. Maybe they own their own law firm, whatever it may be. Maybe you have someone that works at a nail salon. They're very cash heavy on how they get paid in terms of tips and their hourly wages. So these are just unique programs for individuals that are self-employed. And even if they're not self-employed, if they're working for someone else, but they're very cash heavy based, these are programs for them. And then we also have investor loans where you don't have to show any income. The loan is structured off of the investment itself. So we do have a wide variety of products to service every buyer's need. So I always say, don't count anyone out. If you have a specific scenario, please don't hesitate to reach out to me. Send me the scenario and I can tell you what product that we have for them.
Can you drop your email on the chat so as we have it for future case? Oh, yeah. Okay.
There you go. And then the end of the slide deck here is like the appendix, which basically just backs up all of the data that we were discussing. So I won't get into the nitty-gritty, but I can send out this PowerPoint for you guys to use. And even if it's helpful for you to give to your clients, if they want a further detailed understanding of, hey, we work with RCG Mortgage, this is, you know, the partnership that we have with them, this is what they can offer. Some people do like seeing the stats and seeing how it actually benefits them. So don't hesitate to share this information because I think it's super powerful and really drives the point home. But yes, this is my contact information. If you guys have any scenarios, no matter what it is, please don't hesitate to shoot me an email or a text. I do love going over any situation and setting up a consult and just seeing what works best for your clients.
All right, beautiful.
If you guys have any questions or you want me to go back to any of the topics that we covered, let me know. But otherwise, I appreciate everyone's time, and I will definitely send this out to your guys' emails. If you want the copy of this, just put your email in the chat and I'll make sure to send out a copy to you guys. Awesome. Okay. If there's not any further questions, you guys have my contact information. I have your emails. I will definitely send this out to you guys and make sure that you have all this information.
All right. Thank you so much, Keara. Hopefully we'll get to work with you soon.
Of course. Thank you guys for joining. I appreciate your time.
All right. Take care.
Thank you.
Thanks, guys. Have a great night.
I didn't know it's gonna be that small meeting, but all right. Thank you so much.